I'm Nadine Blaney. As I mentioned, it's great to have you here with us on a day where we are watching the market move higher. This is the 6th straight session we've seen the S&P 200 rise. Let's get some perspective. Joining us is Chris Conway. He's joining us from the Australian Stock Report live from our Melbourne studio. Chris, welcome to the program. How are you sort of feeling as we head toward the end of the year? I mentioned 6 days straight for the local market.
Good afternoon, Nadine. I'm actually quite bullish heading into the end of the year and indeed early next year. I think there's been some stats bandied around lately in terms of the Santa Claus rally that we typically get around this time of year. So statistically, we should move higher. But as well as that, we've got central banks and in particular the US overnight, the US Federal Reserve, not really doing anything to upset the apple cart. There was certainly some scope there where they might have changed the pace of rate hikes next year, moving from 3 to 4, but of course they remained at 3. And then I thought what was interesting, the reaction overnight, is that the expectations from the market didn't change, both in terms of the March hike next year, which remains at 60%, and the fact that the market only thinks we're likely to get 1 to 2 of those rate cuts next year. So I think we're still in a very, very accommodative environment. Company profits are moving in the right direction, and it's really the absence of anything particularly bad that I can see that leads me to think that I think we can move higher, as I said, into next year.
For the local market, do you have any sort of year-end goal or any goals for 2018 when it comes to levels?
Not particularly, Nadine. I'm more of a short-term trader than I am a long-term investor or forecaster. I would think if we were around 6,200 by the middle of next year, I think that would be a good result. And as I said, based on what I've previously said, I think we can get there.
Certainly, you're pretty close to in line with Shane Oliver from A&P Capital Investors. Chris, when you listen to some of the commentary coming from the U.S. Fed chair, the outgoing Fed chair, we must say, Janet Yellen, certainly didn't sound like a central bank looking to burst any bubbles when it comes to equities. U.S. markets, continue to go from strength to strength, but when do you sort of get nervous about some of the complacency out there?
Well, at the moment, I don't think there is all that much complacency out there. I mean, yes, the US markets do continue to hit record highs, but I think, everyone still out there is very cautious as a hangover from the GFC, and, that's almost a decade ago now. So I think that caution remains, and that's potentially a good thing. But again, Janet Yellen said overnight that in terms of equity, she thinks they're at reasonable value, but there's no red flags or indeed orange flags, she went so far as to say, that could derail the market. And I would echo that sentiment. So, look, I think the tipping point will be when inflation does arrive and the Fed starts to move more quickly in terms of interest rate hikes, which will happen, the only question being when. That's when equity markets will undoubtedly come under pressure, because again, it's when that accommodative environment that we're currently in changes and people will start to look more closely at valuations. I don't know when that's going to be though, and again, that the best I can guess is what the rest of the market guesses, and that won't be anytime soon. Again, just pointing back to the fact that the market still thinks we'll only get 1 to 2 rate hikes in the US next year.
Chris, let's talk some Australian corporate stories out today, and you can't get past Myer. We're in the Christmas season, should be the height of the Christmas shopping season, and Meyer's saying not even that looks that it will be preventing the company from hitting this shortfall through the first half of the year. I mean, the story doesn't get really much worse for Myer when it comes to bricks and mortar. The company talking up its online performance. Is that enough? Obviously, shareholders not buying that positive spin on the story today.
No, it's nowhere near enough. Look, I've been on record for quite some time saying that I think Myer is dead. I think the business as it currently exists, even in despite of the fact that they're throwing $500 million at it to try and transform their stores and make it a more appealing offering, I just think what they offer is dead. I mean, Myer back in, when it was in its heyday in the 50s and 60s, it was an ecosystem. It would bring people to the stores, and then it would, obviously offer them products which they'd go on to purchase. That ecosystem and the way that we look at retail has changed, and the best example of that is Amazon. That's the new ecosystem. That's the way participants, consumers want to be involved. So, yeah, look, disappointing numbers today. I don't think unexpected. And again, you put it in the context of the environment that we've got at the moment where We had a surprisingly strong consumer confidence read, and at last print we had some possibly better than expected retail sales numbers. You would think that in an environment like that, Myer could at least get to square, and their sales fell, I think it was 2.8%, comparable store sales fell 2.1%. So I agree wholeheartedly, Nadine, it is a very sad story. I certainly don't wish Myer unwell, but I can't see how they get their way out of this because they're starting from so far back.
Well, it is sort of an interesting juxtaposition with the news we had earlier this week in regards to Westfield and the Lowy family exiting their position and selling off into that international company. So yeah, we'll leave retailers for now. Talk about A2 Milk, because we've got the appointment of a new CEO, obviously taking the helm at a pretty good time for the company. She has international experience as the former head of Jetstar and really helped navigate that push into the Asian region. What do you hope for? What do you expect from this new CEO? I mean, you are an A2 Milk holder, if I'm not mistaken.
That's right, Nadine. We certainly are. We've held it for quite some time now, and even as it peaked up towards $8 recently, we didn't sell, and that's because we continue to believe in the growth story. So, what I'm hoping for from Jane Hadlishka, I hope I didn't just do a disservice to her last name. It is hard to pronounce. Is that growth story continues. She brings with her some pretty solid experience in terms of strategy development and execution, and of course being involved with Jetstar and Woolworths as a non-executive director. She has some experience in operating in spaces that are being disrupted. So I think she can apply that experience to the A2 offering, and like I said, it's really just about hoping that growth story continues, and the momentum that has been built up by Jeffrey Babbage and the executive team to this point can be carried on.
I mentioned that you're holding A2 Milk. What else are you holding at this time?
So still in BHP at the moment, like the commodity story, like it into 2018. Think that the ongoing and ever-increasing global growth story will bode well for commodities. Like BHP, I think it's the pick of our place here just because of the diversification. So happy to hold that. And the other one that we hold at the moment is Kathmandu, which is a little bit more speculative, but and look, obviously we were just talking about the challenges in retail, specifically the ones that Myer in particular are facing, but the whole sector obviously with the arrival of Amazon. But Kathmandu is a company that has over the last 18 to 24 months really done everything right, I guess you'd say. They've paid down debt, they've got their offering right, they've got their discounting right, and it's a company that just at the moment appears to be run exceptionally well. So in terms of playing in that retail space, that's our pick there.
Well, the materials are pushing the Australian market to pretty close to a one-month high at this stage of the game. I suppose as we head toward the end of the year, given all that we've been speaking about, some of those broader themes out there as well, I mean, what are you looking to at this time? Do you look upon any of the banks, for example, favourably in this environment?
Yeah, so a couple of stocks that we're looking at very closely at the moment in terms of adding to the portfolio. One is ANZ. Now that's a bit of an index play. If we do get that Santa Claus rally and we get a rally into next year, the banks will have to participate in some form, simply at an index level for us to get there. So ANZ is the one we like. The reason why we like ANZ in particular is because they continue to sell down their assets where they don't have a competitive advantage. So of course that was their life insurance division recently, and that follows their winding down of businesses in Southeast Asia some time ago now. So it just seems that they're, again, continuing to refocus on their core competencies and their core business, which is here in Australia. And of course that $2.85 billion sale price means that there's an increased likelihood that they'll return some capital to shareholders. So, that's probably more of a trade. Like I said, part of it is the fact that we like it from the index component, and it's also starting a little bit further back than, say a CBA, so potentially some more upside in it there. But again, as a trade rather than a long-term investment.
Anything else there?
Yeah, the other one that we like, and probably from a longer term perspective, is Bingo Industries, which is a waste management company. It's going through a roll-up phase at the moment. Currently operates in New South Wales and Victoria, having recently expanded into Victoria, but has ambitions to roll out further nationwide as well. It's an interesting space at the moment. There's a few things going on. Recently we saw Cleanaway acquire Tox, and there's a lot of regulation, obviously, with the focus on the environment these days. A lot of companies and governments really want far more recycling in the mix in terms of lessening the impact on the environment. So look, it's not a particularly sexy space, I'll admit that, but it is, I think, a space where companies that consolidate and perform well can grow and deliver good returns for shareholders.
All right, Chris Conway, Australian Stock Report. Thanks so much for joining us. Appreciate it.
Thanks, Nadine. Cheers.
Okay, taking a look at just a few news alerts coming out in terms of broker moves. We've got Deutsche Bank initiating coverage of Sydney airports with a target price of $7.95 on the stock. Now, also coming from Deutsche Bank, we do have AGL Energy cutting its price target to $27.70. This is in the wake of the Investor Day yesterday, from $28.60, I should say, but keeping a buy rating on the stock. Also, we've got Deutsche running the ruler over Aluka Resources, putting a target price on the stock of $7.20, so lifting that by about 20 cents, but keeping a sell rating on the stock. Now, we've also had a significant run of the ruler over some of the mining stocks coming from Morgan Stanley today, and some significant price target moves. One coming through for Whitehaven Coal. The price target lifted 25% to $3.75, and you can see Whitehaven having a good day off the back of that. Western Areas as well by Morgan Stanley, seeing its price target hitting $2.25, up 15%. Fortescue also getting a look in by Morgan Stanley, the target price being lifted 5% to $4.10. Newcrest up 11%. Evolution Mining, its price target lifting 5% to $2.20. And you can see there on the bottom of your screen, today enjoying about 0.5% share price rise thus far. Now, we've also got these broker moves coming from Morgan Stanley. Illumina has seen its price target hitting $2.20. It's been upgraded to equal weight. Again, these are all coming from Morgan Stanley. Independence Group also getting a broker move coming from Morgan Stanley. It's been downgraded to equal weight from overweight by Morgan Stanley. We've also got Oz Minerals getting a bit of a look in. Its price target has been lifted 15% to $9 a share by Morgan Stanley. And South32, its price target lifted 10% to $3.75, upgraded to overweight by MS.